So now the government's going to be officially open. So if you're a homeowner, you're a home buyer, what's going to happen to mortgage rates? That's probably your biggest concern because we're going to get a flood of financial news down the pike. So we're going to go over the news that's coming down on Thursday, tomorrow. Yeah, it's inflation numbers and the jobs report. But first, let's talk about that 50-year mortgage that's hitting the headlines everywhere. It must be majorly in demand because I'm getting calls from NBC, News Nation. Don't believe me? Check out some of these interviews over the last few days. Over the last 48 hours, I've been on News Nation. They were asking me about the 50-year mortgage. AOL, they're asking me about the 50-year mortgage. And then right through here, we had Brian. He called me yesterday and interviewed me. What the heck's going to go on with 50-year mortgages? So if you want to check out any of my interviews, just go to my website. You can check out these. Go to our blog. I'm posting these here. But check out our YouTube channel. I'm going to have these and more to show you what I talked about on the 50-year mortgage. You might be surprised with my answer. But you're not here for that. You're here for these. So let's get to it. So in today's news, here's what we got. We have really no financial news. We got some earnings reports coming in. But tomorrow's going to be a slew of information. We're going to get the jobs report or initial jobless claims. We're going to get the CPI, which is consumer inflation. How are those going to come in? How are they going to affect these over here? Let's get over to it. So here's what we're looking at right now. Here's the economy. Here's the economic news that maybe we'll get tomorrow. Because once the government opens back up, could we get this data? If we don't, I think we'll get it early next week. So let's prepare for it. Let's look at these numbers to see how these are going to come in. I'm also going to give you some of my insight that I've been finding out behind the scenes on the jobs market. So let's dive into inflation, jobs, and the reason why we do this is that's what the Federal Reserve watches. And that's also what the markets watch. So folks, if you're out there, you're a homeowner right now, I might have some relief for you. If you go to my website right here, the rate update, I created a RateWatch tool right up there. Are you sitting there, and I know you don't do mortgages for a living, so you're sitting there and saying, okay, today rates are pretty darn good. It might save me some money, and then you forget about it. Well, let's put this to the forefront because you might be able to save. I've just helped a client of ours save over $600 a month on refinancing. Could that be you? Well, put in your information into the RateWatch 2.0 tool. What you're going to do is just let me know what rate you want me to reach out to you to go over the numbers. And when they hit there, I'll be personally calling you. So check out the RateWatch tool. But let's see what the market's direction is going to be going on basically after tomorrow, let's say. So tomorrow we're going to get inflation numbers right through here, the CPI, and we're also going to get initial jobless claims. I think we also might get continued claims. Well, the Federal Reserve, they came in at the last meeting and said, okay, we're going to cut rates, not because of inflation, but we're going to cut rates because of the jobs market or the lack of jobs. Well, there was a few reports out since the government shut down, and there's basically mixed news all over the place. But there was an analysis done yesterday that I think is going to hold a lot of weight in today's market. They're saying the jobs market is just steady. Okay, that could be good news, could be bad news. Okay, the good news is if you're out there and you're having a tough time getting a job, you might be able to get a job. But the bad news is the better the economic news that we get, the worse the odds are for a rate cut. Let me get to it. Let's look at it this way. The Federal Reserve, they have two mandates. One is inflation. Two is to keep the jobs market at full employment. Okay, so if we have inflation, they know it's a little bit high, but it's staying in check. There's really no big, huge bumps that we've seen. So now they're saying, okay, we need to look at the jobs market. Well, if the jobs market isn't deteriorating as much as they think, or as the reports might come in, what's going to go on with rates? Well, that's probably going to signal the Fed doesn't have to go in and aggressively cut rates. So that might pull off some of the rate cuts in 2026, and that might make a mess of the market. Look at what happened when Federal Chairman Powell came out 2 weeks ago and said, there's no definite cuts coming in December. And based on the news that we have from the CME FedWatch group, it looks that way. So let's get over to what the CME FedWatch is telling us. So what I come in on each day is we look at this, and what it is Chicago Mercantile Exchange. They do options trading and futures, and they try to predict what's the Federal Reserve going to do at the next meeting. Well, in 28 days, they're going to come in, and what are they going to do? Well, the probability down through here is right now it's at 65%. It's been holding steady there, and that's pretty good. But the problem here is when the Federal Reserve cut rates last time, this was only a couple weeks ago, the markets thought, okay, there's a definite cut in December. Then Powell came in and said, no, we're not definitely cutting in December. And then now the odds are 65%. So that's why we had a retraction in the stock market. Well, now it's at a record high. And that's also why we had a little bit of a bump in mortgage rates last week. So now as this data flows in, what's going to come in? So what I need you to do is if you're a homeowner, home buyer, realtor, even loan officer. Subscribe down below. So every time I post a video, you get an alert. Look at the alert. If it's something that fits your wheelhouse, watch it. You might just learn something. If not, just pass on by. So here's what the markets are doing this morning. We go to the pre-markets and Dow futures. They're up, up, up. We got oil down. Is it a Cinderella story? Well, this is a perfect situation. We have the markets right now. Dow Jones is up. S&P's up and NASDAQ up. Why I say this is a good market? Well, if you're an investor, you most likely buy stocks hoping they go up. Some people buy it on hopes that they go down. That's called shorting. But if you bought stocks hoping they'd go up, it's a good day. Oil at $60 a barrel, right in our wheelhouse for inflation. And the oil companies are making some pretty good money. We also have Treasury yields down, bringing down, hopefully, rates. Right now, we have on the mortgage rate front, we don't have the mortgage bond open yet. But last week on Friday, or the last trading day, we basically had a flat day. So we're going to see how the markets open up today. I will be back at the closing bell to let you guys know how this works. But what the markets are looking at right now is the earnings reports. Look at two earnings reports. I had to throw these up here because I had to show you how much some of these companies are just blowing away their earnings. Look at here, Circle. That's one of those AI. Well, it's kind of a Bitcoin and a trading platform for that. Look at there, right through here. I don't know if you can see that over my head, but their, what is this? Revenue was up 5%, but their earnings per share was up 276%. Yikes. So it looks like the markets are doing pretty good so far today. So when the markets open, I'm expecting stocks to be up. Futures are looking up. I'm looking at the bond market, hopefully just to be steady. Because we don't have data, I think the markets are going to be pivoting and holding for tomorrow's major piece of information. So if you really want to check out what's going on with this, pay attention. So if you're a home buyer out there, we've already taken care of the homeowners. If you're a home buyer, you're building, what should you do? Well, let's go back to the forefront and look at some rates. So we have rates right here. They were teetering. We did lock some people in at 5.99 when the rates were down there. So now they're edged up a little bit. So here's my expectations. I don't think there's going to be major jumps in anything. The markets are going to be steadily stable right through here. We'll probably see some decent returns by the end of the year. And I'm predicting that mortgage rates are going to be flat until tomorrow. Tomorrow could be a game changer. So make sure tomorrow you come in and check that. But here's what I'm thinking. If you're looking to buy in the next few months, reach out to us. We'd like to get you pre-approved, not pre-qualified. And what we're going to do is walk you through your budget, walk you through your credit, get you in a position maybe by just paying down a bill a little bit, we can get you into another program. We're going to consult you through all this. So if you're a home buyer, builder out there, what am I expecting? I'm expecting rates to be still in the range that I was expecting. I'm expecting it at 5.99. 6.375, and we're right at the top edge of my range right here. So my expectations, if you're looking at that, is some of these numbers are not going to come in all that bad. So we're going to have steady markets from here. But again, tomorrow, you have to come back tomorrow after the opening bell to see the reactions of this, because we have the inflation numbers and we have the jobs reports that the markets and the Feds waiting for. So that's our report for today. To find out a little bit more about me, what do you do? Well, just go to the rate update, especially for those looking to buy, because we want to get you pre-approved. How do you do that? Well, just click the button right down through here to get this application started. But we'd like you to rather call us, email us, ask Dan a question, because we want to know a little bit about you. I'm sure you want to know a little bit about us as well. So reach out to us. We'd love to help you navigate through this. But if you hear more about the 50-year term, please have them reference me. Just look up Dan Frio 50-year term, and you're going to see a slew of information out there. I've been on News Nation, AOL, and I was even on NBC yesterday. So check out those videos. I'll also have them on my YouTube channel and on our blog post, so you can check those out to see my reactions and where my thoughts are on the 50-year term. So thanks for watching. I'll be back live today to go over any questions that you guys might have in regards to interest rates, refinancing, looking to purchase. It'll be a live event, so you can ask me questions live, and then I'll be back at the closing bell to let you know how this mess ends for the day. So thanks for watching, folks. God bless. Have a fantastic afternoon, and I'll see you later. Bye-bye.